All right, everyone. So the much anticipated self-employment procedures will be presented today to you by Chet Stone, who's been kind of our resident self-employment dissector of information and being able to support you in this process. So I'm going to turn it over to him. And as always, if you have questions related to this process, please drop in the chat or raise your hand. All right, Chet.
Hello, everybody. Welcome to self-employment. Alicia, can you do the slides for me? All right, people. Here's the new layout. The gray box is how we've been doing it for years. The previous self-employment income and service need requirements. At initial authorization, we requested the 3 months of reporting earnings form completed. Requested all the income confirmations, bank statements, things like that. Then also we requested the receipts to show the expenses and completed the form that way. Copy of the federal taxes, tax transcripts, and like I just noted, all the receipts documenting their income and expenses. At reauthorization, all we requested at that point was just the federal taxes and the tax transcripts. So like I said, gray was how we did it. And starting today, tomorrow, if somebody walks through into your program and wants to and has self-employment as their income, this is how we're going to do it. The key thing is a big reduction of the documentation requirements. And this is what you're going to like. First off, we only need one of the following is needed for income and service need at initial and reauthorization. You only have to complete 1 month of the reporting earnings forms, and that's going back within a 26-week time period. So any time within that 26 weeks, complete 1 month of the form. Or if they have pay stubs, great. Or if they come in with their taxes, great. Or if they have a service contract, and I'll go through those three: pay stubs, tax documentation, service contract, if they come in with this. But again, just to reiterate and to explain, and I figured I'd see maybe some yahoos in the chat at this point, but it's for 1 month, no documentation. They do not have to document their income. They don't have to bring the receipts in to confirm their expenses.
How is everyone feeling about that?
Any notes, any questions?
Yes. All right, cool. So much better. Awesome. Great. Love the self-employment changes. Fantastic. Yay. Great. Amazing. Celebration.
No super duper.
This is great. For a while, I worked with for the IRS. When is this effective? It's about time.
It is effective today.
Yes. Couldn't be happier. Very good. Wonderful. All right. I'll turn it back over to you, Chet.
And just an overall, macro point on this. We're trying to make this self-employment process now, obviously, very easier for you guys with determining the income and all that. We'll get a little bit deeper dive on how we're going to do that as well going forward as we go through these slides. But also for the families, it's a lot of work for them. They don't work for the IRS either. A lot of the stuff for them to get all this stuff together for you, delayed the whole process, the back and forth and all that, explaining what it was. So it's on both sides, a lot easier for the families and a lot easier for you. What we still have, and what we've always had, and it's not changing, is determining what type of self-employment they do have when they come. So an individual is self-employed if he or she earns income directly from his or her own business. They're the boss, they're the president, they run the show. They're responsible for obtaining and or providing a service or product. They cannot be discharged from their employment by someone else. Like I said, they're the boss, they're the president, they run the show. They're not required to have federal income tax, Social Security tax, and or Medicare income tax withheld from their earnings. And they're not required to complete an IRS W-4 form for an employer. And I just want I'm gonna go a little slow through these. If there's any questions, raise your hand, please. And I'll stop through some of these sections. So as we know, the most common types of self-employment that you guys have probably been seeing out there in this environment is the ride share delivery, the Ubers, the Lyfts, the DoorDashes. That segment of our economy is growing, and with the families that we service, that's a big self-employment thing for them. It's a good thing because it's a nice segment. It's a good way to make money, as I've seen. I'm sure you guys have seen the statements that they have brought in, and we'll get deeper into that. Also, social media influencers and creators, the people that are online doing their podcasts and things like that, there's starting to be a larger growing segment there as well. And then we all know the independent contractors that we've been used to for years and years, the electricians, the plumbers, the carpenters, things like that. The key thing, and especially if they do bring in their taxes, is identifying what type of company they are. Are they a sole proprietorship, which is mainly your carpenters and things like that? Are they in a partnership company? They both own a sub shop and they got a partner. Is it a corporation or is it an S corporation? Any questions on those? Excuse me.
Cindy only asked if, are they going to have to work a certain number of hours? And I replied that Chet will be going through examples based on these most common types of self-employment on how to determine income and service need hours. So stay tuned.
Stay tuned. Okay, establishing self-employment. This is the same way we've been doing it before, but just want to go over it again to confirm and reiterate what the process is for that. To verify the self-employment business, families must submit a business records that verifies their self-employment business. Various business records, such as registration with the Massachusetts Department of Revenue, Mass Tax Connect, a DBA certificate doing business as, any required licenses, like I saw a hairdresser, a barber, a massage parlor. They all have to have mass licenses in the state of Massachusetts to perform those services. A big one, of course, with the Secretary of State, they file and obtain a certificate of incorporation with the Secretary of State's office. That's a big one. The key thing about the certificate of incorporation is they get their EIN number, so that's key. All other documentation verifying the business, tax registration certificate from where the city or the parent lives, proof of estimated quarterly taxes. That's a big one for, carpenters, independent contractors. They got to pay their taxes quarterly. Bank statement showing business checking account. That's a big one for a lot of our self-employed people that receive a lot of cash. It's the way of documenting how they get their cash. They deposit it in their separate business account with their business name on it. And last but not least, documentation from U.S. Patent and Trademark Office showing the business name. Any questions there?
I just want to reiterate that we will still continue to use that information sheet where they fill out their name, check off their type of business and what type of business it is. So that will be the front cover. So even if the parent does submit their Uber statement, we still want that top page completed, informing who they are and what type of business that they are establishing as self-employment, and then also the certification page, the signature page will also still be required.
And just to answer Chrissy's questions, so one of these, so yes, all you need is one of these to verify the business. For house cleaners, yes, if they have an expired license, they need to show you a current and active license, and that goes with same thing with barbers and anybody who's required to obtain a license. So I believe what Alicia was talking about, I see a question here. What top page is it the EC self-employment paper? It's the employment verification form? Or on the monthly self-employment earnings worksheet?
It's the first page where it just says the parent's name, the type of
Yeah.
business that they have. Yep, that's
Okay.
the EEC paperwork, yes.
Okay, so everybody's familiar with this, the monthly self-employment earnings worksheet. We haven't made any changes here. The only big change is you only have to do 1 month, not 3 months, 1 month. So obviously the top section of the worksheet must be fully completed. The primary parent's name, the name of the self-employed family member, if not the primary parent, and the month and year income was earned. And like we said, this can go back 26 weeks prior to when this income review is being accomplished. In section A, enter the gross income or sales of their business, including tips, including cash, including checks, everything that any revenue that they make running their business has to go on A. Key thing here in A, and this is where you're going to get all excited again. I love saying it. Supporting documentation is not required for that piece. Section B, enter the applicable and allowable monthly business expenses. This is pretty much, this little section here is pretty much straight from what the IRS has on their Schedule C, and I'll show you a copy of that in a sec. And the key point here is you fill these out, put in all their expenses, but one of the key, and I'll get more into it, but one of the, I just want to make note of it here. As you see, there's no depreciation. They cannot take depreciation as an expense write-off. That's one of the main differences that we have, that the IRS does allow you to take depreciation. We do not. Section C, so you've completed A, you get the monthly gross up there, you get all the expenses, you total up your expenses, that goes on line down the bottom. Then section C, the total of the expenses and deduct that amount from the gross receipts. This is then the family's net monthly business income. And then once you have that, and I'll have some examples of what you do with that number once you've got to that point.
So we can
Any
pause here.
questions?
Yep.
Any questions?
So one question is, just reiterating, do we need to see receipts, expenses, or income?
No. Big no. It's the big change. It'll take a little getting used to, but and I'm just at this point, we're very similar to the IRS. When you do your taxes with the IRS, you're not sending your receipts in at that time. You're not, sending you're just reporting your income. You're listing out your expenses, and then you get your net profit for your company. Very similar here, and just as a note, and just like the IRS can do, and just like we can do on everything that the families fill out when they fill out their applications and forms for us, is that we can go back and review and confirm what they stated is in fact true on their applications and forms. And the IRS is the same way. It's they can come back and audit you at any time.
Yeah. And so there is a question on chat as it relates to how are we verifying that what they report is true? And so we want to emphasize what they're providing you is what they're providing you. The onus will be on EEC to do that program integrity review. So they're filling out the information, they're certifying the information that they submit to you is accurate and complete. And as Chet noted, per our record keeping terms and conditions, we can pull files and do our own review. But also note, this is not on you if we do find something. So you have determined the family eligible based on our policy and our procedure using one of the documents. As long as you've obtained the documents that we've required you to accept, establishing it, 1 month of information, and then the certification form, the signature form, and the top page, you enter into CCFA. Any steps after that would be on EEC. There was a question on, can I just use the parent is already established a business? can we just use their taxes and not the worksheet?
Yes, and we can get to that's one of the slides coming up. If they come in with their taxes, you can go off of their taxes and do the analysis that way. I think it's sometimes easier, just even if you have their taxes, to complete this sheet, because it kind of helps you to walk through it, to kind of picture it better. Because you're taking certain things from the taxes, the tax forms that go directly. These are very symbiotic relationship between this form and what you'd see on taxes.
Chet, one more question. Are we going to continue to use bank statements? And I'm assuming this is related to income verification.
Bank statements to determine what they made in income. You do not need to just ask them what the total is. What was their total receipts for the month? How much money did they make for the young? Go to the sheet, fill it out, and you don't need bank statements to back it up.
And so Cindy says, so they can provide paperwork even if they've never paid taxes. That's okay.
Well, and that gets to another thing is if they're not paying taxes, everybody has income, and just like the federal government has in the state of Massachusetts, if you make income in the state, you have to report it and pay taxes. You have to do your taxes at some point. Even if and I tell people say, hey, I don't make enough after I've got my automatic deductions, with the children, all stuff. I'm in a no tax bracket. Well, they should do their taxes at that point, because for multiple reasons, especially if they're independent self-employment, it's Social Security. So they can get Social Security back in the days. The earned income credit, child tax credits. There's a lot of credits that families can get, even if I don't know, I don't have enough income to pay any taxes. You can get credits and make money back, so they should be paying taxes, and even if they're underneath the limit. That's my tax advisor response would be. But other than that, if they're making enough money to meet the service need, usually they have to do taxes. It correlates to that $15 per hour. But I don't want to get too deep into that stuff.
Right. So Cindy does have a comment.
Yeah. I'm sorry. As Tyrese has said, our job, your job as financial assistance administrators, is to educate families. You can't make them do something, and we're not asking you to be that revenue agent to make sure that they're filing their taxes. As we said in the family experience sessions, we're working with them, we're providing them information. They, as individuals, will make the choices that are best for them, whether we agree with those choices or not, such as filing taxes. Okay, there's a broader social element to that, but that's not our job to require them to file taxes.
Thanks, Randy. So we'll take one more question from Deborah, and then we're going to have Chet move on, because there's a lot of questions that will be answered in the upcoming slides. Okay, Deborah?
Somebody mentioned like using the taxes to fill out this worksheet, and I'm slightly confused by that, because I thought the worksheets only used at like if they're new to self-employment initial, and taxes are used at a reauthorization.
Yeah, with the way it is now, you don't need to use the taxes at all. You can just use this form. But sometimes they will come in with the taxes. They're not required to come in with their taxes. They just need to complete this form.
Yeah. If the parent
even at a reauthorization, they don't need taxes?
Nope, do not need taxes.
The parent can choose to use their taxes. Like I said, it's one of the acceptable form. They can choose one of their taxes.
So every reauthorization, they can just do this form?
Correct.
Sorry, let me go back.
Okay.
That's the big change. If in doubt, go to the form.
Okay.
But if they call up and say, if they come in and they get all taxes, they get this, that's great. Use it. It makes it's easy to fill out the forms, and very accurate too. At that point, then you know.
Yeah. So
Here-
just to reiterate, the documentation requirements, it's one of the following needed for income and service need at initial and or reauthorization. So I want to make sure everyone takes time to read what this is stating. A 1-month earnings form, pay stubs, or tax documentation or service contract. And then no receipts for income or expenses. All right, so I just want
Everybody
to pause there.
take that for a second, digest it.
Yes.
Let it sink in. And that starts today. No waiting. CCFA is all set up to handle just the 1 month.
Okay, we will move on.
All right, process for determining income. And in the process for determining income hasn't changed. Once you get the numbers, it's the same as it's always been in the past. It's just getting to determining those numbers. But I'll walk through it. For example, if parent provides 1 month of income, the service need calculation will be the net monthly income divided by 4.33, as it's always been. That amount is then divided by the minimum wage, which is going to be $15 an hour for 2024, and it was the same in 2023. That amount is then divided by the minimum wage to get the hours per week. If the parent meets the minimum activity requirement, a 12-month authorization is issued. If the parent does not meet the minimum activity requirement, a provisional authorization is issued so the parent can obtain an allowable activity during that time period. It's still provisional, still 26 weeks, and it's going to be going to 12. Any questions? That's kind of a big one. It's not a big change, but it's a big thing. If they meet the service need, they get the 12 months. If they don't meet the service need, give them the provisional.
And,
Yes, Annette?
and Annette, I'm sorry.
So if this is effective now, if for CCFA, what if their hours only go to the 25? Are we still doing the seeking approved activity for the additional 5 at this point, or?
Correct.
Correct.
All right. Well,
What? Oh, I'm sorry.
no, it's gonna go to the
Oh.
example. Nikki, if you have a question related to this particular slide.
Well,
Okay.
I'll let you determine. So, families who have the Uber or the Lyft, the part that I've always struggled with is how do they prove it? Because are they an S corporation?
Nikki, not to cut you off. We're gonna get to Uber.
Oh, you're getting there.
So
All right,
you'll
never
get there.
mind. Perfect. Thank you.
No problem.
Okay, here's process for determining income and service need hours, step 4. This is an example 1 using the self-employment reporting earnings form. Parent provides self-employment earnings worksheet, so you fill out the worksheet for the 1 month, which includes the deductions. When calculating income and service need hours minus the allowable expenses. So they come in, you do the form, they say, hey, my gross income was $5,540 for March. They say, here's all my expenses. You put all the expenses in the boxes, you tabulate it up, it comes out to $1,580. You deduct the expenses from the gross, and you end up with a net monthly business income amount. Take that amount, and this is the calculation that we've been doing all along. Take the net monthly business income amount, divide it by the 4.33, gets you the $914 per week. Divide that by the $15 minimum wage, gets you the 60 hours per week. That makes that family eligible for full-time care. They meet the service need. In example B, so the same thing, they come in at initial authorization, the parent provides a self-employment, that you complete the self-employment earnings worksheet with them for the prior 1 month. And this one does not include any deductions. They say, hey, this is what I made. I got no expenses. So they made $4,500 for March. You don't deduct any expenses. You go to the SMI chart and their income is over the 50% at SMI. Therefore, the family is ineligible. Any questions there? It's pretty much these are how we've been doing it all along. No changes here. Just wanted to walk you through kind of some examples. Pam, question?
Yeah, I just was wondering why in the long run do we always use net for self-employment when all the other parents in the state have to go by their gross income?
Well, the way a business works is you have you get paid $150 for a job. Well, it costs you $50 in supplies. So you're truly not making $150. You're only making the 100. And the IRS, that's how the IRS has done it, for years and years. So we're just gonna go how they do it. A little different on like a regular payroll check. They're deducting income tax, Social Security, all that stuff. So you give you $500, they deduct all that. Well, depending on how your taxes are filled out at the end of the year and all that, a lot of those funds come back to you. Some don't, but we've always taken the gross with regards to payroll. Pay stubs, I should say.
Okay,
Kind of get it?
I get
It's
it.
just-
I
It's just, you're working, you're your own boss. You're running your own business.
Well, I think one of the things to note is the tax liability. If this is an IRS thing, they determine the tax liability based off of after expenses. Whereas for parents with a pay stub, the tax liability is based off of the gross. So it's a little bit different between the two. It's two different entities, so you can't really commingle them into one category. One thing to remind people, Karen just made a note about the minimum wage. It is based off of the state as to where they're doing where their business is being conducted when it comes to the minimum wage. So we're showing the Mass state minimum wage, but I know if their business is, they live in Massachusetts, their business is based in New Hampshire. And that's what they get paid based off that New Hampshire business. You would use the New Hampshire minimum wage. I mean, pretty similar to other calculations. Annette, you had a question?
Yes, on example B, so if a parent brings in 1 month's worksheet, and they're over the 50% SMI, can we have them give us their taxes and do it off their taxes? Because seasonal workers, they may be enrolling when they're at their peak in terms of income. So that prior month might be, it could be January and they made a ton snow plowing, and then, or February, and then come March, they're nothing. So do we give them that option of saying, provide us more worksheets or give us your taxes?
Well, that's why it's 26 weeks. It's a half a year we're going back. So hopefully during that time period, and this happens with people that are in the real estate business too. They might not sell a house for 3 months. They might sell 5 in 1 month. So you got to kind of blend that out too. So that's why you do the total and then work it out, depending on what that time period is. And that kind of gets like,
But I think that's my question though, because you're saying parents, we tell them to bring us, when we're enrolling them, we're asking them, typically we ask them for their, most recent pay stubs, but now we can ask for their for their pay stubs within a 6-month period.
Yep. So
We're
they have
asking
an
them.
option. Yep, they have one of the options: a tax document or the reporting's earnings form. That's a simple answer. Yeah, one of the two.
yeah. So if they have
I just think
fluctuating
it's a
income,
lot in terms of the family experience. if we tell them, you know, we need either your taxes or a form showing your income and expenses for within 6 months, and they choose to bring you in the this is an initial enrollment, and they choose to bring you in the form, and then you say, oh, well, you made too much money, you're ineligible. And now we're sending them back to bring in the taxes to see over the year what the average was, if that would make them eligible. I'm just thinking in terms of the SMI piece of it, you know, what's going to be more simple for the
Yeah,
parents?
and I think, Annette, you're exactly right. Talk to the family, find out what the situation is, find out what the business is, and try to determine the best way to figure out what their income is, to make them able to receive services,
Help them with
whether
their
it's a service
eligibility.
hours or the income.
Yeah, it is definitely a conversation with the families, and that's why we're giving you the various options, and the time frame is expanded so that they have an expanded time frame and they have multiple options to submit. Okay. However, any questions you can, if you run into any questions, obviously send it to the EEC subsidy management with specific scenarios related to families. All right.
And just, you know, they have the flexibility to pick any one of those months within the last 6 months to you know, fill out the worksheet. All right, on to using the taxes, determine income and service need using taxes. Obtain copy of their most recent federal tax return, including all applicable schedule. These forms and schedules include, but not limited to, of course, everybody's familiar with the 1040 U.S. individual income tax return. The key one that you're going to see here, which is going to list all the expenses, and there's a picture of it here, is the Schedule C, profit or loss from business. The Schedule E, supplemental income and loss. That's another popular one that for people that have businesses. So basically, the general procedures for calculating, and just a note on this, as you can see on Schedule C, see how it's very familiar to our worksheet. It's got the top box is income. Well, actually, at the top, right, the name, number, all that fun stuff up there. I mean, their EIN number. The next box is all their income. The third box is all their expenses, and then finally down the bottom is the net profit or net income for the business. So identify the gross profit, net profit reported on the appropriate schedule, like I said up top. Review the deductions claimed by the parent to determine if the deductions are allowable. The big one, you kind of can't see it, but it's listed on here, like I said, is depreciation. We don't allow depreciation, so you have to add that back on, but I'll get to it. If there are deductions that are not allowable, depreciation, add that amount of those deductions back onto the net profit. This includes deductions not allowable in accordance with self-employment expenses. The net profit plus the amount of any non-allowable deductions will equal the parent's self-employment income, which will be used to determine both eligibility and the number of hours of care. Any questions on the tax form? As you can see, it's very similar to our worksheet, so they kind of go hand in hand. If somebody comes in with that, it makes filling out the worksheet real easy, and you know it's accurate, it's what they're telling the IRS. No worries. All right, example A. The parent provides a 1040 U.S. individual income tax return that includes the Schedule C, their profit and loss from the business information. When calculating income and service need hours, Part 1, gross income is reviewed, that top part. Part 2, the expenses is reviewed for allowable expenses. And for this example, we're doing a family of 3. So as you can see, this family, the gross income down the bottom there, the key line is $23,573 in gross income. They didn't have any write-offs, no expensive, great business to have if you can have a business that doesn't have any expenses. No allowable expense write-offs. It's the $23,573, which works out, which will be their net yearly business income. So here's the key calculation, because you're gonna have a monthly calculation, all that, but when you have the net yearly business income, when you have tax form, you take that 23,573, divide it by the 52 weeks in a year, get you the $453 per week, divide that by the $15 minimum wage, and that gets you to the 30 hours per week. That's eligible for full-time care. So basically, the big story here is, like I said, when they come in with their tax form, that calculation is going to be a yearly calculation as opposed to when they have the worksheets, a monthly calculation. Questions? Annette?
If they only bring in their taxes to reauthorize, how are we figuring their current parent fee?
You figure it out once you get to their what their net income is. Once you get into their income calculations, that final number, then go to the chart. It's the same as if they brought in their payroll taxes. Once you get
So
to the
in this example where they were earning $453.32 a week, that's what we would put, we would take
Correct.
that figure and
yes,
multiply it by 4 and put it in monthly income.
yeah, and actually, I think that's kind of just like you'd normally do. Once you get to that 453, handle it the same way you.
No,
So-
currently what we do,
so,
we don't
yeah.
use that for their current income. They have to do the worksheets.
Yeah, so hold on, so
Or
now-
provide a bank statement or whatever. So I'm just asking, are we still doing that in conjunction with this tax
Nope.
form or?
Maybe I didn't
So-
follow.
Yeah, so Annette, here's and so Lori Atwell just put that question, why can't we just divide it by 12? So in normal circumstances, when you're putting it into CCFA, that would be one of the ways you could to get that 1 month of the self-employment.
Right.
What we're trying to do is making sure the family is eligible. You have to get to the eligibility determination first by getting the hours. So this screen is showing income and eligibility. So they meet the eligibility based on the hours, or if you need to make sure they meet the minimum wage, you can do it, the other way, dividing it by the 25 or the 30 hours to make sure they meet minimum wage. But you have to make sure they're eligible based on the hours. When you go to the CCFA part, then you can put the 1 month of the salary, so divided by the 12 to put into CCFA, then CCFA will give you the parent fee.
Okay,
It's
so they
hard-
do not have to supply any other worksheets or current current bank deposits or anything like that.
Nope,
If
we
they
had
just use
reiterated.
their taxes.
Nope, we reiterated, you only need one of the documents. So if they provide you with this profit loss statement, their Schedule C, this would be the only document you would do, determine the income and the service need based off of this one document. And like I said, once we will have a CCFA training. CCFA is available now for you to put in the 1 month income.
Yeah,
So you would just need to get to the 1 month income to put into CCFA. However, you still need to determine if they're eligible based on the activity hours. And this is what we're showing you here.
right,
Is how to get to the activity hours.
right. That part I got. It was like to determine the current parent fee they're gonna be charged. Like,
Yeah,
so
and
if they come
CCFA
in to
still does that.
reauthorize, I just wanted to clarify that if they only bring their taxes, that we're going to calculate their new parent fee based on their gross income divided by 12 and put in 1 month.
Correct.
No, I think what's confusing her is that this tax document doesn't have any deductions. Normally you do see deductions in it. So it's just this example doesn't have any deductions. If it had deductions, then it would be the 23,000 less any deductions.
Right. Right.
So that's the only thing, but this is actually a true example based on what Alicia said yesterday. It's just another example. Does that make sense? Does that help?
Yeah, no, and I mean, I understand the calculation part of it. I just was clarifying that typically they bring in their taxes, their tax return, the employment verification form, whatever. And then they usually bring in some kind of documentation that shows either canceled checks or their bank deposit of for the previous month. And then that's the income that goes in CCFA for their current parent fee. But what you're saying now is they don't have to do that. We can take their income and divide it and put the 1 month of income into CCFA for their parent fee. Okay.
Correct, as long as,
Correct.
with this example, they don't have any expenses. If there was an example of expenses, you would still use the net.
Right. Thank you.
Yes, Pam?
Hi, just real quick. I think some of the confusion is that those of us that have been doing this for ever and ever.
It's a big
so
change. It's a big
it's a
change.
big change. So just to clarify, and I know that you said it, but I just want to hear it again. I know before we couldn't just take their tax documents, but now we're just we had to take the transcripts because we had to actually show that that's what they actually submitted.
Yes,
Now
at
you have
real-
options.
at reauthorization, they had to show their tax transcripts. It was great if they had it at authorization originally. They do not need to show you their tax transcripts anymore.
Okay, so basically we are just believing everything that they say, and it's not up to us.
You got it. You nailed it right there.
All right, thank you very much.
Everybody hear that?
Can you guys hear me?
Yeah, we can hear you, Tyrese.
Yes, I
Now.
heard it. Did everybody else hear that? You're just believing what they say, and they have an option. And so if they give you tax stubs, they give you their tax return 1 year, you're gonna take it. The next year, they might give you a 1099. You're gonna take what they give you, and they have an option.
Or they
And
can
you're
just
gonna believe
or
it.
they can just tell you what they made. This is how much I made. This is what my expenses were. You do the calculation, here's the net.
You're right.
And just like the IRS does it the same way, if at some point we want to come back and take a look, we have me as an auditor, we have investigations, and we will be performing some reviews, I'm sure, down the road. We will be looking into this stuff. If you're worried about that. It's a big change, so it's one of those, it's almost unbelievable, but this is believable. Okay, moving along, is that a?
Chet, no, there was one question about a two-parent family using taxes to verify income for a business they both work at. Do we use the weekly hours for both parents?
Yes, well, here's the deal, so they both work for the company. Depending on how the company is set up, if they both own, if they're 50-50 on it, that's how you do it. They split the income, that's their separate income. So the company made $50,000. The husband owns half, the wife owns the other half. They both made $25,000. That's their amounts. And you determine it from there. Okay, sometimes, sorry.
I'm sorry, Chet, it's my question. So if the husband and wife are both co-owners of the business, I have to take the gross income and divide by 2 and figure out the hours per week separately for both individuals.
Just like you do if they both brought in separate pay stubs, they both work for 2 different companies, same exact way.
Well, okay, that analogy isn't, I don't know.
Well, yeah, so Don,
So-
if you look at this one, so say if it was both of the parents on this particular profit and loss statement, the
Correct.
total is $23,000, you would divide, that's where you would do, the net is $23,000. And you can do it 2 ways. You can divide it at the top at the $23,000, or you can get to the hours and then see they only are working 15 hours.
15 hours each. Thank you.
Yes.
That clarifies. Thank you.
And just a note, because you probably will bump into this as well. If they do bring in, if they both are co-owners of the company, a lot of times they pay themselves a weekly payroll check as well. So then you have to determine what they make on their payroll checks and then also on their net income from the company and add those two together. Because usually a lot of time, and this is the key thing that's going to be big on their service need, because they're taking a weekly draw out. So of course, it's going to reduce the amount of money that the company makes at the end. So you have to add those two because it's going to put them over that service need. I'm sure that question will come back up again. Okay, here's a big one. This is the process for determining income using everybody seen. Well, I shouldn't say everybody, but this is the Uber statements, the Lyft statements, the DoorDash statements, things like that. So we'll walk through this now. A family comes in, they submit 1 month of their Uber pay statement. This statement contains the gross payment, the expenses and fees, the taxes, and then what their net payout is. So when calculating income and service need, the net payout is what you use to determine their income. The assumption is the expenses, fees, and taxes are their allowable deductions. So in this case, in this Uber statement, it's family size of 5. As you can see, the net payout for the month was $6,065. You divide that by the 4.33. This is our normal calculation that we've always used. Divided by the 4.33, gets you the $1,400 in the weekly income. You take that weekly income, $1,400, divided by the minimum wage, gets you to 93 hours per week. So they are eligible for full-time care. Any questions here? Because you're going to see a lot of these ones.
No question. I know, Chet, there was a question brought up yesterday that these expenses do not include their additional gas and potentially their cell phone that they would use for their Uber. And so in this case, if a parent does come in and they're just like, well, here's my income, and I just want to use this. This is where the communication, hey, additional expenses can be deducted. Do you want to complete the reporting earnings form, which would show your these expenses that Uber already takes out, but also your gas and your cell phone expenses. This could decrease that $6,000 to a lower income because they have additional allowable expenses for being an Uber or Lyft or the delivery services parent, self-employed parent.
Car insurance being a big one, and gas, of course, being a big one. Okay, this is the process for determining income when using a service contract. In this example, a family comes in, they submit a service contract, and in this case, is a contract with the Commonwealth of Massachusetts. The contract contains the parent's information as the contractor, the services that are being provided, the total amount the parent will be paid, and the terms of service. So when calculating income using this form in the service need time, the maximum obligation amount can be used to determine what their income is. Key point being, make sure to look at the length and term of the contract. The effective start date and the end date must be reviewed. Some contracts are a year, some are 6 months, some are 2 months, 3 months. You have to review and make sure that you have that time period, because they will, when the service contract does end, they're going to have to reconfirm what they're making, because they might not get a contract. They can become unemployed. They might sign another contract and have a larger income at that time. So their conditions have changed. But just on calculating, for a calculating point here, it's a family size of 3. The maximum obligation on this contract is $30,000. The term of the contract is 14 weeks. Divide that, it gives you the 2,142 in weekly income. Take the 2,142 divided by the minimum wage, gets you to 142 hours per week. The max that we can put in CCFA is 60 hours, I believe, 60. Anyway, so these guys, girls, doing a lot of work per week. But long story short, they are eligible for the full-time care. Any questions on this? Okay, and this is kind of getting to the point. So they come in with pay stubs. The family owns a corporation. They can be paid by that corporation through pay stubs. The pay stubs must include the following. Just like any normal payroll pay stub, they could have the deduction of state and federal income taxes, how many hours they worked in that time period, and the FAA will use the allowable number of pay stubs in income calculation. So it'll be 4 pay stubs. You can use the 4 pay stubs in that case. Yes, Cindy? You could.
Yes, so if the contract is like, I don't know, 14 weeks or whatever, does their authorization end at that time? Because they don't have an income after that?
No, if it's a 30-day, it's right, Alicia, 30 days, they have to report a change in income if it's longer than 30 days.
Oh,
So it's a change reporting requirement. The change reporting requirement may fall. If this contract does not renew, then they would have to inform it's a change.
thank
Yeah.
you.
Alicia, you sound like you're echoing on my side.
Yeah.
Everyone else hear that?
I know, it was double, yes. It was re-echoing.
And I just want to I want to bring this up because I had brought the point up, but now it's kind of an applicable one. So the husband and wife own the corporation together. They have the company. They're paying themselves or taking a weekly draw every week of $1,000. All right. So they have pay stubs. They're paying themselves out of the company. So they're going to have pay stubs and they're going to have corporate income at the end of the year. So you have to do the calculation on the pay stubs and you have to determine what the net income for the company was at the end of the year, add them to, and then that's their total income. And like I said, you're going to bump in, you'll know when somebody comes in and they don't tell you that they're doing the pay stubs, and then you look at their net income on their what they're reporting, and most likely they're not going to have the service need because they've pulled out $1,000 a week or whatever they're pulling out of the company. So they're pulling the income of the company into their pocket on a weekly draw. Okay, other applicable documentation you might come into. Families can provide other sources of documentation that reflects the services being provided. A big one will be a 1099 employee. Your carpenters, your electricians, they're going to come in, they're going to have a lot of 1099s. But that's not your job to review those 1099s. They can come in and prove it out. Just like anything, they bring in what they want. But the way I would do it is just say, hey, what's the total of all your 1099s? Put that on the worksheet. What was your expenses? Boom. And then it gets to the net. But this is good to help if somebody does come in. The documentation must include the name and parent of the service provider, the payment time period, and the hours worked or total pay for that 1099 time period. Some people get 1099 for a whole year. Some just get it for a job. They did 2 weeks for somebody. So you have to talk to the family or the person when they bring in a 1099 and say, what was the time period of this? That's the key thing. And just a note at the bottom, if the documents do not contain enough information to service income or service need, FAA can have families complete the reporting earnings form. Everybody's familiar with the reporting earnings form? Any questions on this?
So Cindy said she wasn't, am I still echoing?
Yes.
Yeah. All right, I'm gonna mute you. Am I echoing now? Still?
Yeah, you might want to make sure your Teams is
Yes.
closed
Yeah.
out.
Yeah.
Close out your Teams completely. Sometimes it creates the double echo because it feels like you're in both spaces.
Okay.
Not as bad, but a little bit.
Cindy said she wasn't sure about the reporting earnings form. So want me to go back to that slide?
Okay,
You're still echoing bad.
Can't understand you.
Yeah, you sound like a robot. You might have to go out of Zoom and come back to us. Alicia, maybe try to disconnect audio and come back on.
so Cindy, that's the self-employment earnings worksheet right there. And there is, the bottom is cut off, but there is a signature, there is a signature section at the bottom of this. And then, and just a note, you know, because I know you guys, hey, we're trusting the family and all that stuff. When they do sign their financial assistance agreement, it states on all that stuff. There's lots of caveats there, and one of the main ones being that at any time with anything any form they fill out, we can go back and confirm what they're stating is true and factual.
Thank you. I thought you had called it something different a minute ago.
Okay, Alicia, you can jump back to where we were.
Okay, am I all set now with sound? Perfect,
Nice.
all right. All right, so I'm gonna slide back to, here we are, issuing a provisional.
Okay, if a self-employed family provides a reporting earnings form or any other allowable documentation that includes income for less than 1 month, no income, or does not equate to enough activity hours, the Family Access Administrator can issue a provisional authorization. And I'll read that again, or just I'll just let you think about that. But hey, they just started the business. They haven't got 1 month in. They have no income. They got the business going. They haven't provided 1 day of service. It's not going to equate to enough activity hours. Give them the 26 week now. It's going to get switched to 12 weeks. Give them the 12 weeks. And hopefully the business can get going. They can start making some money and they can meet the minimum activity hours. Okay, bringing the process to life and the key takeaways. New self-employment policies and procedures. What we're trying to do here is we're trying to provide flexibility for self-employed families. It simplifies the process for the family access administrators, as you can imagine now, after we've walked through this. We're trying to simplify this as much as possible. As you all know, when you're thinking through your head, you know, going, the way we used to do it and all the hoops and all that, like I said, it's a big change. The hoops are done. You don't have to jump through them anymore. The CCFA functionality is currently up to date with adding only 1 month of income for self-employed families. So family access administrators, you guys can all start moving forward with the new self-employment process. And just as an overall, if you do have any questions or anything like that, send me an email, or actually send it into the comments unit, and then it'll go to me.
For that.
And then it comes to me. So if you want to cut them off, just send it right to me.
Thank you, Chet, for that overview of the new self-employment process. As he did mention, you are able to implement this process now. The forms are not updated specifically, but the only change is obviously we removed the language surrounding requiring receipts and income documentation. So if they're going to use the reporting earnings forms, you can use the current one and just communicate with the family. They only need to submit one. So if any of your families are up for reauthorization, contact them and let them know, hey, I know last year we asked you to do all of this work. Please you do not have to do all of this work any longer. And tell them what options they have for submitting documentation to determine their income and service need for authorizations moving forward. Kathy had a question. What if they had previously had 2 approved activities and now they have their own business? Will they qualify for another, I'm assuming that's a seek and approved activity or provisional. Will they qualify another seek and improve as a service need? So right now, we're still under the 26-week provisionals. We have not implemented the 12-week as of yet. Okay, so Kathy, I hope that answers your question.
But you want to make sure you educate the family.
Yeah, educate your family. Any other self-employment questions? All right, well, I'm going to turn it over to Randy, who's going to give us updates from transportation policies and procedures.
Thanks, Alicia. Yeah, for transportation, it's not so much of a deep dive as just an update of everything that hasn't changed. There has been one change that we'll be getting to. But as this next slide will show, the key regulations will continue in place as they have been. You know, we've all gotten through, and it's easy for me to say because I'm not a provider, but it's tougher for the providers getting through that whole 15-passenger vehicle transition through RMV. So that's behind us. But all of the registry of motor vehicle requirements remain intact in place. There haven't been any other changes since that major one of getting rid of the larger vans. The driver's license, the school bus driver certificate or 7D bus driver certificate still need to be current. Vehicle registration, the EEC requirement for insurance, the annual inspection sticker, the semi-annual 7D or school bus inspection requirements remain intact. So, you know, what you've been doing, and Chet and I have been able to review all transportation providers that receive financial assistance. So everybody should have a good handle on what's needed. But certainly if you have any questions, let Chet or I know. For subcontracted transportation, again, you have that option to use a bus company typically, or other transportation company, but all of the requirements remain intact, whether you self-operate or if you contract out with someone else. I've pulled out in this next bullet that the EEC background record check still needs to be completed for all transportation staff, whether they're subcontracted, your own employees. It needs to be that EEC background record check. And it's just a reminder that the RMV requires a query check. Other agencies may have their own background check that they do, like the Boys and Girls Club has their own background check, but those are not sufficient to be a driver or a monitor in an EEC financial assistance funded program. Okay, it has to be our EEC background record check. The EEC trainings continue in effect. Annual Strong Start Transporting Children training needs to be done. There needs to be somebody with current first aid and a current CPR training on each vehicle. That could be a combination of the driver and the monitor, or perhaps even one, each driver monitor has one or the other. But that still is something that needs to be in place. And the training of drivers and monitors still needs to include sharing your policies, your program policies, the EEC transportation policy, the regulations, the transportation oversight plan. So that's something that will continue unabated. Are there any transportation providers that'd be willing to share success stories or challenges? We know during COVID and post-COVID, the ability to find drivers was a challenge. The ability to find vehicles, because we heard that Amazon was buying all of the vehicles, the Sprinter vans, so you couldn't even get a van if you had a driver. How has it been going? Has that changed for people in terms of getting staff? getting vehicles. If it's continued on as, go ahead, Pam.
Randy, I won't leave you hanging, don't worry. It's been a challenge still, to get, I'm sorry, my video's not on. It's been a challenge to get drivers. We have a lot of staff that are drivers, but to actually get a driver per se. But we were able to finally last year we got our second van, and then we still have the 71 passenger bus. So it's still a challenge, I would say. But I just didn't want to have nobody answer you because you've always been there for everybody when they needed you. So just want to throw that
Thank you, Pam.
And Pam, that's what we've heard kind of in all the other training sessions when we've asked that question. The environment is still pretty much, it hasn't gotten any better than.
No, not at all. Not really.
Yeah.
But we're doing what we can.
And as we can tell, even the public schools and their transportation companies that they hire, or if they're self-operated, they have the same challenges as well. So, you know, I wish there was an answer. And if we ever come up with one, we'll certainly share it. But that is the state of transportation life right now across the board. And if you follow the trades nationwide even. So any other thoughts, comments at this point about how transportation is working?
We have a couple things in the chat, Randy. It's been hard. It still has been hard to locate a van. It's been horrible. And Jenna from the Y says we contract out and getting the drivers to complete the required trainings and the background checks can be challenging.
Yes. We, you know, this is an opportunity to, you know, share those success stories if you have them, or if you want to think about it and send it into Chet and I, and we can distribute it. But working with subcontractors is a challenge. And, you know, they have their own hiring and equipment issues that they're focusing on and meeting the pickup and drop off needs that they have for the other clients that they have. But if you do have a way that you work successfully with a subcontractor, let us know. And certainly go to our EEC website, because we've tried to put in there a sample contract that can be used that will hopefully lay out the expectations that you as a provider have of that subcontractor. And just as having a discussion and dialogue with families that you serve, having that dialogue up front with a contractor can help alleviate problems down the road, or at least make it be, you know, on a phone, you need what and when and why. So the more that you can articulate that earlier in your relationship with the contractor, even if you've had multiple years of contracting with them, have that discussion when the heat isn't on. It'll make everyone's life a little bit easier. Getting buses, yep, ongoing problem. If a provider is unable to provide transportation, will EEC pay to a private transportation company? Jeanette, depending on what you mean by, you know,
you're going to have to subcontract with that private transportation company. They work for you, not for EEC. We pay you, you pay them.
That subcontractor would need to meet all of the RMV requirements. They would need to comply with all the EEC requirements, and that responsibility is on you as an agency. Okay, so having the documentation, having the training, as challenging as it can be as your agency's responsibility, even though it's subcontracted out. Okay, so the next slide just really covers the different types of transportation. You'll likely recognize yourself as being in one of these categories. That's a self-operated program, transportation program, that you employ the drivers, you own or you lease those RMV approved 7D or school bus vehicles. Some of you may use a transportation company and you contract with them. Some of you actually even provide your own transportation with your own drivers and your own staff, along with having a contract with a bus company because of the area or the numbers of routes that exist, so that it's a hybrid of both self-operated and subcontracted transportation services. The bottom category there is something that has taken off, that Chet, given his geography, has really expanded upon, but that is the use of the Charlie card, or what used to be called the T-Pass program. That programs are able to, if the situation exists, to purchase a Charlie card or a pass, transportation pass, for their families to use so that they can self-transport their child to the program. Okay, so within Boston, the Boston area, because of the availability of different transportation services, bus, subways, trolleys, that may work because those forms of transportation run by where families live, and it runs by where the child needs to get to. So it works so that you don't have to have your 7D van spend 50 minutes going 1.5 miles because of traffic. This option, again, you should investigate that. Let Chet or not, I know if you have questions, but this is something that could operate in any of the regional transit authorities across the state, up on the North Shore, in Central Mass, in Springfield, down the South Shore. But again, it's just another option that may be considered by your agency, and let us know if you have questions. Chet, did you have anything you wanted to say on that Charlie Pass, since you're most familiar with it?
Yes, I've helped, as Randy said, I handle the Boston area. So I have helped about 6 or 7 programs start having a T-Pass program. So if you're in an area that has a good public transportation system, that you think you have some families that can take advantage of it, and it could be worthwhile. Like you said, it is one of those things. You got to kind of have the transportation. The public transportation is going to be near their house, and it's going to be near your program. So it's kind of a small area of people. But long story short, if you do think it could work for your program, feel free to reach out to me or Randy, as I've helped some transition to establish a public transportation program, the policies and procedures, how to track the passes, how to give them out, all the various questions that you may have about a public transportation service that you do. Please feel free to reach out. In other words, the wheel's been created. No need for you to have to try to recreate the wheel.
So the next slide that we'll cover are the key updates. So the first one is that there will be new child care financial assistance procedures. We able to flip, there we go. Child care financial assistance procedures is in development. There will be a section called Managing Transportation Services that basically replaces the Appendix E transportation page, which used to be the Appendix M for all of you long-term people. But that will be coming out. And the next bullet is the one that is a significant change for transportation. But regular travel time can now be up to 60 minutes per trip. So if your program needs that additional time over that 45 limit that has been in place up until now, you now have that ability to go up to 60 minutes per trip. Okay, so if that takes some pressure off your drivers, your monitors, yourself in terms of how am I going to figure out this trip that has to be 45 minutes, we're hoping that that provides you with some additional support and flexibility that to better serve the families in your area. The transportation addendum, still need that. That still needs to be completed. The priority populations transportation requirement, that is still waived. The alternative transportation supports, I think there was something in here asking about using things like Uber or the Lyft, or, you know, other ways that you can support families getting their children to care. Yeah, let us be in touch with us. Let us know. We'll work with you to see how that can happen so that you can be reimbursed up to that $12 or $18 one-way or two-way reimbursement level that is in place. The Charlie card pass option we just talked about. And that final bullet is really just to remind folks that the EEC transportation policy, where the transportation staff need to take attendance when they're out picking up and dropping off kids, that they need to check that vehicle at the end of each trip to make sure there are no children left on it, and that there needs to be a second person checking that vehicle after each trip, really needs to be in place. And that there's a parent notification policy if a child doesn't show up. You know, if you followed locally, unfortunately, because you can see it in the national news as well, where unfortunately in Massachusetts, there was a child that was left on a bus for 5 hours strapped in to a seatbelt. You know, it's one thing to say that we're following a policy and we've checked off and we've done everything. But I know all of you, just as all of us here, you know, policies allow us to ensure children are safe. And that's the key piece. We want to make sure children are safe and where they need to be. These checklists and, you know, inspections, they may seem sometimes laborious, but it's really make sure that the children in our care are getting appropriate, safe care. Charlie card payment. All right, thank you, Alicia, for addressing that. The 60 minutes limitation, that is in effect right away. Yes. So you can start doing that. I'm glad that there's some positive response to that. And
we can
Uber
read
with
out
Bob's,
for the sake of the for the sake of recording, we can read out some of these questions and
all right.
respond to. Yep, no problem. So so Pam asks, who is the Charlie card paid by, and is it for public buses also? Yeah, so if the parent does meet the eligibility requirements for transportation, so that's a added aspect to their placement, and then those funds being reimbursed through the program will be used to obtain the bus passes or the Charlie card. So, you know, there's multiple, I think we found about 30 regional transit authorities across the state or more. And so they all have different methods on how their buses work. A lot of them do have the Charlie cards, but some of them do have their own independent bus passes that can be used. And Melissa asked, what does alternate transportation support mean? And so, Melissa, that's an ultimate transportation support would be the Charlie card, or you know, use of the Lyft or the Uber as a means to getting children to program. And so I want to emphasize, when we have approved these Back in the day, it used to be the taxi, and we started to have the Uber and the Lyft. It was used on more of an emergency-based cases that was allowed for transportation. The contract just emphasized transportation services can be provided. But as you know, and with this comment, Lisa stated we'd offered the Uber and the Lyft options. Family stated that it's not enough. It's not going to be enough. It's not sustainable for Uber and Lyft because their costs fluctuate. Their prices can be anything depending on the time of day, peak hours, non-peak hours. And so, yes, our cost reimbursement would not sustain an Uber and Lyft methodology. And so you would want to take a look at that. But it's allowable when needed and when necessary. But as we're seeing, it's not something that can be sustained on a month-to-month basis to get your children with their families. Mind you, the bus passes has to be with their parents back and forth to care.
Thanks, Alicia. This next slide is about transportation. No significant changes or no changes really on transportation billing. When reviews are done, we're going to continue to look at the transportation log. Does it match up with the classroom attendance sheet? Does that match up with the billing that has been submitted? Reimbursements will be, again, at the approved rates whenever there are the transportation is authorized for those reimbursements. Incurred costs. So if you have costs, and this came or continued, that if you have incurred costs, even if transportation was not provided, you can still be reimbursed for that. The rates are 12 and 18 for one and two way transportation, and the things that can't be billed for, it's a accounting piece, making sure that we're not billing for children if their placement has ended. Okay. And we've added that new bullet there that programs where staff are being sent to a school and walking, public school typically, and walking the children back to the program, that is not reimbursable. That type of a transportation program is not a reimbursable program. The next slide talks about transportation compliance. And again, all of you have been through a review with either Chet or myself. And as I just mentioned about the billing, we'll be looking for the review period, the information about the parent needs, the passenger logs, the attendance records. If it's a child's working with DCF, we'll be looking that the DCF referral includes that transportation need checked off. The transportation plan that every program is required to have through licensing should be available. The transportation oversight plan that all of you have sent in to Chet and I over the past month or so, specifically for programs that receive financial assistance for transportation, that needs to be completed annually. We'll be looking at the driver files, the monitor files. We'll be looking that the documentation for the vehicles are in place. Again, as mentioned earlier, those haven't changed. Registration, inspection sticker, both the annual and the 7D or school bus inspection, which is done semi-annually. The insurance coverage. And if you subcontract with the bus company, we'll be looking at that contract to make sure that it is, in fact, current for the time period of that service review month. And then the transportation billing procedures that you have in place. I think earlier it was mentioned that they're using subcontracted services. It can be a challenge. Again, if people can come up with a solution to that, let us know, or if you want to jump on right now and let us know what works in terms of making sure that the training is completed by the subcontracted companies. You know, how can you work with that subcontractor to make sure that their staff are getting the Strong Start transporting children training, that they're getting the trainings on what your policies are, what the EEC policies are on transportation. Typically, bus companies, they don't deal with this because they're serving public schools, or they have a video monitor and they feel like they're safe, or they have those little signs at the back of the bus that say bus is checked. Those were all well and good, but the EEC requirements, the EEC policies for that secondary check are in effect. Lauren, you had a question?
Yeah, hi, Randy. Chet's been super helpful with answering questions along the way. I know one tweak that we recently made with Old Colony Y is for one of our subcontractors, instead of requiring that each individual driver log in and take the transporting children training, that they are now, like, they've designated one person within their transportation company that like has the login and all of that information, and they then log in and screen it for all the other drivers, and then they kind of sign off on that and send us the documentation for that. It just removes, I think, some of the barriers with like each individual driver trying to do it independently on their own time on the computer. So that's one of the workarounds we've found.
Great, thanks, Lauren. And I think that option still exists for all of the Strong Start training, or it used to, where you can do group training, as long as, you know, as you had said, as long as someone has taken responsibility, signs in, and has signatures of when the training was completed, and that included, you know, all of those staff. So thank you. That's a great point to say. Anything that we can do, or that you can do, or the subcontractor can do to make success happen, I think that's a good process. Okay.
Yep, so there's a question, Randy, says if we get a DCF referral that has transportation marked off, and the parents do not need the transportation due to them having a car, do we need to get a new referral from DCF without the transportation marked off when we get an audit?
They don't need,
No.
no, they don't need to get another form. Basically, the way we would audit that would be to see, you know, we see who's getting transportation services, and then we look at the attendance, as well as we look at their service need form, you know, the transportation approval form, to make sure that they are and have in fact been approved and need it. And that's what we use the DCF. If it's a DCF client that's getting transportation, we would look at the DCF form to see that they were approved for transportation.
And things may change.
Yeah.
You know, the circumstances may be that, you know what, my other family member, or I have the car right now and I can transport. Great, perfect. That child's getting there. But things may change. And if that referral form already includes transportation approval, then it's like, we can keep rolling. You know, you can add them to your bus schedule, your van schedule, or work something out for that.
And I also want to reiterate, I know we have a lot of questions related to documentation surrounding TCC. And so if it is a child that was authorized for DTCF initially, they did not have transportation in the beginning. It wasn't marked off on the form, possibly. At some point during the 12-month authorization for DCF, you start providing them transportation. That transportation service can continue through the TCC through the 2 years. You do not have to get any additional information from DCF to continue transportation for that child, as long as they started transportation through the support services during this first 12-month authorization. Okay? Because what Chet and Randy would look for is just kind of backtracking to see when did they start the transportation services. And then Randy, you want to talk about the walking program again that was found?
Not really, because I don't want
There
people
is
to think they
no,
can start doing it, but um, there is no walking program that you can be reimbursed for. And basically, it's if there's a public school nearby, typically it's for school age programs. If there's a public school that's nearby and it's within walking distance, you cannot send your staff to that nearby public school, round up the kids, and have them escort the children back to your program, and then put in for transportation services for that activity. It is not something that can be reimbursed.
So if a child has transportation on their voucher and gets a ride by a family to after school or walks, do we bill for transportation?
no.
No. Next question is, if a voucher says transportation, but we do not provide transportation, do we need anything additional to accept the voucher? I'd say in this one would be no, because what it is in your billing, you would not be adding transportation to the child's attendance if you're not providing it. That's the key part, everyone. When you go, this is when we go back to the beginning where we're talking about enrollment and attendance and doing your attendance, and then you go into CCFA, you're doing your CCFA in some point, it'll be 0 without transportation. If you start adding A01 and A02 and you're not providing it, now you're adding the reimbursement for transportation, and then we're pulling, and you're like, oh, well, I haven't provided, now we're recouping. So it does come down to the billing piece, ensuring that you know what you're billing for. So yes, we're saying use as scheduled, but make sure you confirm the placement is correct when you hit that as scheduled button, because that as scheduled is gonna add whatever the parent schedule is and what the placement is for. So for Willie Mae, if you're a voucher provider, for what I understand, and so you're receiving the vouchers, and it may say the parent was eligible for transportation because the parent may have asked CCR&R, am I eligible for transportation? So whatever that communication that didn't happen that says that you don't provide transportation, when you go to do your attendance, don't add transportation to the attendance code so that you're not hit with funding that you weren't eligible to receive. So that's critical.
And the family may need, they come into your program, and they may need transportation. Let them know you don't provide transportation so they can take their voucher to a program that does provide transportation.
Okay. I think that's all the questions in the chat. The next slide is the final slide. And basically, it's key reminders. Use our EEC webpage for transportation. That's where we have all of the sample forms, some of the workbooks that you can use to complete the transportation oversight plan, the links to the RMV for information or questions that you may have. And again, certainly let Chet or I know, be in touch with us. And that final bullet there is that if there is an incident regarding transportation, contract providers, family child care systems, please notify the EEC regional office or Chet or I, and we'll make sure that the regional office is also updated. Chet and I work with licensors and the regional offices across the state when transportation comes up, transportation issues or questions come up, because certainly licensors have a lot of things that they need to look for. If Chet and I can help alleviate some of that question or burden on transportation, especially since transportation can be a little quirky and involved, we're working with them to help out in that regard. Are there any other questions, final comments, or questions about transportation at this point? Chet, anything else from you? Oh, you're on mute, Chet. Oh, Lauren?
Hi, Randy. Sorry, there was a little bit
Sorry.
there was a little bit where you cut out for just a few minutes, and I had asked a question in the chat earlier about so just as part of our supportive contract, we often issue gift cards to families for different reasons. And one of those things is being like when they're going through challenges around transportation, sometimes needing to get to a doctor's appointment, different things. But in a pinch, if it works for that family and that caregiver and they're able to ride in the Uber or Lyft with their child to get them to care, is that a possible workaround for transportation services? I know it's not ideal from a cost perspective, but is that if the parent is with them, because then it sort of is removing that training component. Do you know what I mean? For the driver?
Right. And that is the benefit of that, because the parent is transporting their child. So, you don't have to have the attendants. You don't have to have the vehicle check. But it still is limited to the EEC transportation reimbursement rates.
Right. Okay.
Yeah. So this is the add-on. So you have a supportive add-on, Lauren, so you would just use your support services to cover that.
Right. Yep. Okay. Thank you.
Alicia, I'll send it back to you.
All right, great. So we are coming to the close of our provider experience training. We hope that we provided some information that, a lot of you were excited, you were curious, you were a bit anxious, and we hope those feelings. How are you feeling now? Can you drop the one-word responses in the chat about how you're feeling about enrollment-based attendance? How are you feeling about the new self-employment process, minimizing documentation? How are you feeling about now being able to transport your children 60 minutes in a route, because we have some high traffic areas? So we're seeing that it's positive, it's better. Feeling relieved, very grateful, more relaxed, so much better. This is great. Reassured and relieved for families. It's been great, good, much better. You're feeling informed, clearer, positive, excited. So this is great to hear, because it helps us in our working relationship with you guys, with our field, our family access administrators, and be able to providing you with clear instructions on what you would need to do next when you are determining the authorization and eligibility for a family, how you're placing them, what their schedule should look like so that your billing is accurate and it's complete. Also, supporting families when it does come to self-employment and when it comes to transportation, some of these alternative supports for providing transportation services. So we hope that this was very informative for you. And so you're probably wondering what's next. So we'll do another couple of sessions of the provider experience the week of the 19th. I believe the trainings are on the 19th and the 21st of December. So we're going to skip a week. But what's going to happen during that week that we skip next week? Come back and we'll be talking about program integrity and administrative procedures. As Tyrese and Bethany had mentioned at the top of this training, we're going to talk a lot about communicating with one another when it comes to our families and how we are doing the eligibility process and communicating vouchers and communicating authorizations ending and starting. So that's going to be addressed. We're also going to talk about, Chet and Randy are going to come back and they're going to talk about, hey, now you received the engagement letter from the EEC audit unit for a fiscal monitoring review. What do I do if you've never experienced that before? So they're going to talk a little bit about that, how to respond to any findings. And we'll talk about internal controls. How can you enhance your internal controls? If you are an FCC system, we'll bring some updates from those procedures as it relates to over-enrollment, PTO, and the PFML required submissions. Like we said, the recordings will be up once we get through all of the provider experience training. And then we'll also provide you with the slides once we're complete with these trainings. As Megan mentioned in the beginning, we do make minor adjustments to some of the materials. We want to make sure the material is complete and accurate so that you can utilize them as a source of information. And we have more to come. So thank you all for joining, and we look forward to seeing you next week during the program integrity training. And if you do need to come back, we do have a drop-in office hours. If a light bulb comes up, in the middle of the night and you're like, hey, I have one more question, we do have some office hours tomorrow from 11 to 12:15. So we'll be available to answer additional questions. Until then, have a great afternoon and stay warm. It is pretty chilly. Take care, everyone.
Thank you.